Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing regarding the key sectors in focus in trade today, as well as the next few trading sessions. First up, just let's have a quick look at what happened in the global markets yesterday. Yesterday, the US market saw a significant correction with all the three major indices witnessing a sharp downtick. We had the Nasdaq which plunged 3.3%, the S&P 500 fell 2.1%, and the Dow corrected by 1.5%. This downturn was triggered by a report from the Institute for Supply Management highlighting ongoing contraction in US manufacturing activity during the month of August. So if you see, S&P 500 has fallen below its 20-day EMA, indicating bearish outlook for the short term. If the index sustains a move below the 50-day EMA zone, that is the levels of 5,470, it could trigger further selling pressure, potentially driving the index down to 5,400 levels in the short term. Coming to the update regarding Brent oil. So Brent oil has given an upward sloping trendline breakdown on Tuesday and ended below the level of $74, which was in line with our expectation. This decline is driven by anticipated production increase from OPEC in the coming weeks and persistent economic data in China. Looking ahead, Brent crude is likely to continue its downward trajectory, potentially testing the $70 in the short term. Coming to the update regarding the US dollar index. So the dollar index ended at 101.77 with a gain of 0.13%. Going ahead, the 20-day EMA zone, that is the levels of 101.90, will act as the immediate hurdle for the index. Now coming to the update regarding our markets. So Nifty for the third straight trading session, the benchmark index traded in a confined zone with a narrow range. So on Tuesday it oscillated within just 86 points and closed virtually unchanged, signaling a lack of conviction from bulls at higher levels. Going ahead, considering the gap down opening today that we are seeing in our markets, the zone of 25,080 is likely to act as the immediate support for the index. If the index slips below the mark of 25,080, the next support is placed at 24,980 levels. On the upside, if you see, the zone of 25,310, 25,330 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,330 will lead to an upside towards 25,420 followed by 25,500 levels. Coming to the data regarding the derivative data. So the derivative front, September futures ended on a flat note and the cumulative open interest of the current, next and far series has surged by nearly 1%. If we look at the option chain, that is for tomorrow's expiry, 25,300 has significant call open interest followed by 25,500 strike, and on the put side 25,200 has substantial open interest followed by the 25,000 strike. Coming to the update regarding Bank Nifty. So Bank Nifty on Tuesday, the benchmark index significantly outpaced the major indices, rising by 0.49% to close above 51,600 mark. The daily chart shows a bullish candle with a prominent lower shadow indicating strong buying interest. ICICI Bank played a key role in driving this performance in trade yesterday. Going ahead, considering the gap down opening, the zone of 51,300 will act as the immediate support for the index. If the index slips below the mark of 51,300, the next support is placed in the zone of 50,900. On the upside, if we see, any sustainable move above the levels of 51,700 would lead to an uptick in the index towards the mark of 52,100 in the short term. Coming to the option chain data, that is for Bank Nifty, today's expiry. 52,000 strike has significant call open interest followed by 52,500, and on the put side it is majorly seen in 51,500 and 51,000 strike. Coming to the key market indicators. So in trade yesterday, the volatility index slipped by nearly 1%. However, since the last couple of trading sessions, it's been oscillating in a range bound manner between 14.3 and 10.84. A clear breakout beyond this range could trigger a significant directional move in the index. If you look at the advanced decline ratio, despite the index trading in a narrow range, the advanced decline ratio tilted in favor of the advancing counters in trade yesterday. Coming to the key sectors in focus, so technically Nifty Financial Services, Nifty Bank, Nifty Private Bank are likely to outperform the frontline indices in the short term. And on the flip side, we have Nifty Metal, Nifty Media, Nifty Reality are likely to underperform in the short term. Coming to the FI DI data, both FIs and DIs were net buyers yesterday to the tune of 1029 and 1896 crores respectively. That's a wrap of today's edition of the podcast. Thank you for regularly tuning in. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.